Welcome to ForexTV.com. It's Monday, December 3rd. I'm Remy Hokie for your New York Forex Market Buzz. In New York, afternoon trade as of 1:25 p.m. Eastern Time, Euro-dollar is trading around 146.65. Dollar-yen is at 110.40, while sterling-dollar is at 206.37. On the U.S. data front, the ISM's manufacturing index fell slightly to 50.8 in November. The positive highlights from the report include new orders up slightly to 52.6 and production showing an increase to 51.9. Joining me now is Greg Michalowski, VP of Trading and Liquidity at FXDD. Good afternoon, Greg.
Good afternoon, Remy.
Thanks for joining us today.
It's my pleasure.
Well, as we kick off the first trading day of December, we're seeing euro-dollar trade fairly range-bound between 146.53 and 146.83 in the New York session, and we're seeing equities trading mixed on the day. Well, this week we have key central bank meetings as well as NFP. So first and foremost, besides the obvious concerns of the credit crunch and also the U.S. housing market downturn, Greg, what primary event risks should traders be focusing on this week?
Well, you mentioned the central bank meetings this week, and we have the Bank of Canada's first meeting. It's going to come tomorrow. They're expecting no change. The ECB and the Bank of England have their meetings as well, and both of them are expecting no change as well. As far as the ECB goes, the Trichet and company have been still talking about the inflation fighting stance that they're worried about. They're seeing increasing in commodity prices and in particular oil, which is causing a problem for inflation, or in their mind at least. And but that's getting offset a little bit by the credit crunch situation. So although they talk a good game about inflation, the credit crunch is actually doing some tightening for them as the LIBOR rates continue to go up in the Euro LIBOR rates and the UK LIBOR rates and the US LIBOR rates. So that's sort of doing their tightening for them. So if they're worried about inflation, I think they're just talking about it. I don't expect them to do anything as far as their rates go at the ECB. In the UK, they also have a meeting, and last meeting their vote was 7-2 in favor of keeping rates unchanged. Two of the Monetary Policy Committee voted to ease rates, and those two were not members who had previously been considered doves, I guess. Actually, Blanchflower is a dove, but the other member was not considered a dove. In the July, when they tightened rates, the governors Rachel Lomax and Charles Bean, they voted in favor of keeping rates unchanged. So they didn't vote in favor of a cut last month. So if they should side on the side of Blanchflower and Give, then the vote would be 5-4. So it could be closer than what the market expects. They definitely have worries in the housing market. Although today they did have a manufacturing index come out, which was stronger than expected, with a pickup in input prices, but the service PMI comes out on Wednesday, I believe, and that's more important to the Monetary Policy Committee. So there's still data to come out in England that may sway some votes toward the easing side. So although I don't expect them to ease, there's a possibility that they may ease. In the U.S., Cohn and Bernanke sort of led the way toward that at the next meeting the Fed's going to ease. They too are worried about the effects of the credit crunch. The 3-month LIBOR rate has gone up 26 basis points over the last 14 days in a step-like fashion. Every day it's going up and up and up. That cancels out the ease, the last ease that they did, and I think they're sufficiently, or everyone's sufficiently worried about the housing market, the effects of rolling over the variable rate mortgages, and those mortgages are fixed to the LIBOR rates, or a lot of them are, as are corporate loans. and as those rates go up, the LIBOR rates go up, it in effect makes things worse for the homeowners and worse for the corporations in rolling over their debt at the banks. And this is not what the Fed's intention is at this point. So I think, barring a strong number in the employment number on Friday, and it would have to be really strong, I think, for them to not ease at next week's meeting. So those are the key events coming up this week, prior to the non-farm payroll on Friday.
Okay, now that we've covered the fundamentals, let's move on to technicals for the major pairs. The dollar index has seen a minimal reversal from weakness in the past 4 sessions. And as you mentioned, we had better than expected data from the Eurozone as well as the UK with their November manufacturing PMI data out. So for euro dollar and sterling dollar, what are your levels for the pairs in the coming session?
Well, the euro dollar hit a trend line support level this morning at the 146.18 level. I consider that to be the sort of the turning point on the downside. I expect to have good support down there, and maybe the fact that it bounced off that pretty convincingly this morning. I mean, albeit we're only up at 146.63 at the moment. Been trading basically in about a 40 to 75 range in the New York hour, but things are looking a little bit better for the euro from a technical perspective. The other thing, with them being a little bit more hawkish as far as the central bank, I'm more favorable on the euro than I am about let's say the pound sterling. So if we can get through the 146.80 level, I think we're going to go and test 147.11 and then move our way up to about 147.50, where some 100-hour moving average comes in at the present moment. There's also a trend line around that area. So keep an eye out on the 146.80 level, and then 147.11, 146.50. If we get below the 146.18 level, I would, something's probably up, and I'd probably be a little less constructive on the euro and try to reevaluate what's going on. As far as the pound sterling against the dollar, it's been waffling around in a range lately. We are currently at the 200-hour moving average and the 100-hour moving average. Both are around the 206.50 level and trading at 206.45 right now. It's sort of where it should be going into important meeting and some more important information coming out of the UK economy before that meeting. So I think so the 206.50 level is sort of my point of equilibrium. If we go higher, and really we're in like a 207.5 to 205 range over the real near term. And we'd have to break out of either of those ranges to that high and low to get me excited one way or the other in regard to it. The thing that that may break it down is if they do have a surprise easing, that takes the pressure off the pound and its rise, and then I think we have a chance of going down to the 201 level, where the 200-day moving average is situated. Another key level on the downside is 203.78, which is the 100-day moving average. The dollar yen, it has obviously been moving in a downtrend. We've had a high of in June of 124. We had another intermediate high in October of 117. We went down all the way to the 106. About the 106, 107, 106.90, 107 area. Bounced back up to about the 38% retracement of the move down from 117.80. And that's it so far. It's sort of been a bounce, but it's sort of there's no real conviction on the upside just yet as far as the dollar yen goes. So we're going to have to see a move above that 38% retracement, which comes in at 111.24, around the 111.24 area. If we get through the 111.24 area, I think we have a chance to move up to about 112.50, where it should have additional resistance on the upside. On the downside, as far as the dollar-yen goes, a break of the 109.65 level would be an indication that probably this correction is over, and we may go and test the lows again of the dollar-yen down at the 107.10 area is where the low is. So that's sort of my technical levels for the major currency pairs.
Well,
at the moment.
Greg, since you just mentioned dollar-yen, if we could briefly touch on euro-yen. As of 1:35 p.m. Eastern Time, euro-yen is around 161.95.
Right.
Going into the coming session, what's your forecast for the euro-yen cross?
Those crosses have been, the euro-yen, I always speak in terms of euro-yen and sterling yen, and then add the Aussie yen as well. Very sideways. Obviously they had with the carry trades moving higher and higher all through 2006, 2007 until we had our big correction in the August area in all those crosses. Since then, the euro yen has been the better bid, I guess, of certainly in relation to the sterling yen, and we're seeing that in the euro sterling, and I would consider that cross to be the better bid of the two. Let's say euro yen versus the sterling yen. Only in that the euro the ECB continues to talk higher rates. The UK has a better chance of cutting rates, at least if not now, then earlier in 2008. So I expect euro sterling to do better, and as a result, euro yen to do better as well. But from a technicals perspective, I look at the chart and I see up days and down days and up days and down days, and there hasn't been any sort of trend where you've had more than 2 days of movement in any one direction. So it says to me, and not only that, but the days ranges have been fairly large from a low to a high. So that says to me that the market really doesn't know which way it's going. The best traders in that type of market are those who use very short-term charts and just trade it on a day trading basis. So there really isn't a something to grab on from a medium to longer term trend perspective in regard to those currency pairs. I will say that sterling yen has to get through 229.28 to make any move up to the upside. We have a lot of highs at that level, and which failed, and I'm looking at a 4-hour chart. There's at least 5 different highs at that level, and it's got to get through that level to get me excited on the upside as far as sterling yen. So if anything, I would consider the sterling yen to be sort of more inclined to move to the downside. Aussie yen, again, it is. Had a steady move up all the way until the July-August area, where it sold off sharply, came back all the way up to the old highs in July, and fell back again to almost 61% of the move higher. It came all the way back down. Right now, it's sort of in the middle of that range. I'm talking about the move from the August low until the October high. We're sort of toward the middle of the range, but I don't see anything again as from a technical perspective to say things are looking good one way or the other. Now the Aussie and the Canada, they're considered what are called commodity currencies. They tend to move with the trend in the commodities, and we are seeing oil come off to the 87 handle after going up and testing. We're going to break through 100, or at least get to 100. Never did. Got very close, but didn't. That's come off. Gold as well has come off. Trading now at around 787 from a high of 836. So as those commodities come off, so too do the commodity currencies like Aussie and Canada, and we're seeing the dollar Canada get it back above parity, and the Aussies come down as well. So that brings more volatility to something like the Aussie yen, and probably causes some a little bit more downward, or at least liquidation pressure from those who are long that pair.
Okay, Greg, as always, thank you very much for your insight and analysis.
You're quite welcome. Thank you.
Have a great week.
You too.
That wraps it up for your Forex Market Buzz with Greg Michalowski, VP of Trading and Liquidity at FXDD. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.